Good afternoon. Welcome to Midcap Radar. I am Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. this Friday. The Nifty trades flat after giving up some early gains after a steady opening as global markets remain weak. IT, healthcare lose ground. Metals and energy buck the trend.
Amara Raja, SKF and CRM Silk Mill surge post-earnings. Amara Raja and SKF get a margin boost. CRM Silk fires up after a stellar Q2. The textile maker has also declared a 200% dividend.
Ajanta Pharma slumps after earnings disappoint. Margins at a multi-quarter low and weakness in international business weigh on the second quarter's performance.
The PSU Bank pact continues to gain. UCO Bank jumps after a strong Q2 show with a profit number at a multi-year high. The management tells CNBC-TV18 the lender expects 17% loan growth in FY23 on a year-on-year basis. All right, those are the top headlines that we are tracking on Midcap Radar today. For the markets, absolutely flat. Some positive bias on the Nifty. That one is up 7 points, but just consolidating at that 18,060 mark. We have Bank Nifty, which is under some pressure, so that index is down 0.3%. And Midcap's largely in line with what the banking index is doing. So very quiet today, Reema. Despite the big fall that we saw in the US markets.
You know, Wall Street has ended in the red every single day this week, right? Yes. Every single day. And despite that, the Indian markets are up 1.5%. So that just gives you an indication of India's resilience. But it's also going to be an earnings-heavy day today as well as tomorrow, right? So today we're awaiting numbers from Titan, TVS Motors, Cipla, Britannia, Indigo, Escorts. And on Saturday, we've got State Bank of India and Bank of Baroda. So I guess there is a bit of a wait and watch approach, right?
Yes, definitely. So we'll do one thing in that wait and watch approach. We'll look at the technicals of the markets and get in Mr. Hemen Kaparia of KR Choksi Securities. Hemen, good afternoon. Thanks a lot for joining us. Well, consolidating at these levels and bucking the trend as far as global markets are concerned, what is the chart telling you?
A very good afternoon to you, Sonal. Thank you for having me. Couple of things, like you said, I think Reema also mentioned, tremendous resilience. Dow Jones has been all over the place, so has Nasdaq, and we've held firm. Now, having said that, if you look at the Bank Nifty, there's an 8th trading session today, Sonal, and okay, we've been range bound. We have corrected. It's not that we haven't, but in a range between 40,800 and 41,700. So we've been in this range. We've had a brilliant run-up, and the consolidation has been sideways, not downwards. So the undercurrent remains solid. The VIX is sub 16, I think, which means that I don't think we're going to expect a big move either on the downside or on the upside. But a sub 16 VIX is a big relief for bulls. So the setup is fine. Like you mentioned, metals are good. IT is oversold. Cement is doing fine. The stocks, PSU basket, rail stocks. So it's all over the place. Looks good. But the market per se, Nifty doesn't seem to be in a mood to go anywhere. We need to take out 18,200, and for the Bank Nifty, it's 14,767 to be precise. Once that gets taken out, I think it would provide the fillip to the Nifty to take a serious crack at all-time high. Reliance is also placed nice because the weightage of Reliance and the mood sentiment for the market is huge.
Okay, and in that case, Hemen, what would your individual technical picks be?
Yeah, a few stocks which stand out. Firstly, a buy on IRCTC. Consolidation, we're on the verge of breaking out about 755. Verge, I'm saying because weekly chart, we haven't closed yet today. So buy IRCTC at 755, stop loss 735, target 795. It's a modest trading target, I believe. Over a slightly longer term, it will be comfortably overshot. The second stock is a buy on OFSS, a rounding bottom on the daily chart. Mechanical indicators have signaled a buy after oversold positive divergence and now a crossover buy. So one can buy OFSS at 2980, stop loss 2930, target 3080. And lastly, Hindalco. I think the metal pack is buzzing. Hindalco is breaking out. The level was 413 in terms of a mini breakout. The maxi breakout is at 445. So one can buy Hindalco at 422, stop loss 410, target 446. Above 446, we'd see at least another 25 rupees on the upside.
Thank you very much, Hemen, for that. Have a good weekend. Let's invite Vivek as well on Midcap Radar. He's going to tell us about the Midcap movers. Vivek, over to you.
Well, good afternoon. Quite a few stocks today are buzzing in the session. First on my list is Dreamfolks. Now, this particular stock has snapped a 5-day losing streak in style today. Now, some corporate earnings have come where the airport traffic is something that has been highlighted as making a very strong recovery, and Dreamfolks clearly a beneficiary of that particular trend. Exide, we are highlighting on the back of the fact that on the back of very strong results from Amara Raja, this particular stock is seeing some sentiment up move. Repco Home Finance, now this particular stock continues its up move for the second straight session, up almost 12% in the last two trading sessions. Keep an eye out on Karnataka Bank as well. In the last 5 trading sessions, after very strong results, the stock is up almost 35%, and clearly the up move continues today on very strong volumes. Astra Micro and Defense Play is now joining the party, and this stock is up almost 9% in the last 4 trading sessions. Two cement stocks also on the radar, Dalmia Bharat and JK Lakshmi. JK Lakshmi, a clear beat on the consensus, and which is why the stock is moving up. Dalmia Bharat, this time the cement pack actually had a very weak set of numbers, but Dalmia Bharat and JK Lakshmi both have marginally outperformed the expectations. On the other hand, on the back of weak results, you're actually seeing Schneider Electric move down almost 4.5% on weak volumes, on strong volumes rather, and Chemplast, Sampar and SRF both down today in the chemical pack. Laurus Pack continues its down move today. The stock has moved on quite significantly from the result day lows.
Okay, so Chemplast and Mar reported weak set of numbers. SRF reacting to its weak numbers reported yesterday in the presentation, though they are quite optimistic. Vivek, thank you so much for joining us. So with that, we'll slip into a short break now. We'll connect with Murali M, who's the CMD at Shriram Properties, to discuss their Q2 operational update. Welcome back. Well, focusing on the stock Shriram Properties in focus on the back of company's latest update on its operational performance. Sales volumes were up 50% on a sequential basis in the second quarter, and the realtor also has a strong outlook for the second half of FY23 as it gets set to launch projects covering 5 million square feet in terms of volumes. To discuss the latest update, the launch pipeline and more, Murali M, who's the CMD at the company, is joining us now. Mr. Murali, good afternoon. Thanks a lot for joining us. Well, it is a sharp increase on a quarter-on-quarter basis for you. But in case of the first half, in terms of volumes, they stand at 1.67 million square feet for you. You had guided for 4.6 million square feet earlier for FY23. Will you be able to achieve that guidance? And if yes, what is making you so optimistic about the second half? What is the sales pipeline looking like?
Good afternoon, and thank you for hosting me now. Typically, H2 is the festival period. Invariably, all the real estate companies have done well in H2. And more particularly on Shriram Properties, our performance in H2 is always much stronger compared to H1. So H1, we had launched about 3 projects. In Q3, we have lined up 6 projects to launch, and Q4, we lined up another 5 projects to launch. Close to about 5 million square foot is being launched in the next 5 months' time now. And our guidance of 4.5 million square feet, which is very well on track, and we should be able to complete that comfortably in FY23.
Okay, so you're sticking to your guidance of 4.5 million square feet, 4.5, 4.6 million square feet for the full year. Could you give us a sense in terms of the growth that you've seen on a value basis, given the realizations where they are? What has been the growth and the outlook there?
Prices are going up because of the consolidation and RERA-led price increase. I expect that to continue further. In last year, H2, we increased the prices close to about 8%. In H1, we increased by about another 6%. Q3, another about 2.5%. And this year, I expect another about 5% overall. So the prices are constantly going up. But we should also keep in mind the inflation and the interest rate increase, which is a concern. We need to be mindful about it. But what is giving us comfort, on the other hand, because of the consolidation, large players like us are able to take the prices up. So I expect 10% price increase this year, FY23, and that likely to continue for at least another 2 years is what I see.
So 8% in H2 of last year, 6% in the first half of this year. And for the remainder second half, you expect around 5 to 8% price hike. Am I getting the numbers correct?
Yeah, another 5% in H2 we are looking at price increase.
Okay, 5% in the second half. Can you give us a sense of the breakup this time around? How much of the growth came in from new launches and how many projects did you launch in this quarter itself?
As I said, H1 we launched just 3 projects. Q3 we have lined up 6 projects, adding to about 4.3 million square feet. Q4 we have over 5 projects, adding up to about 2.15 million square feet. So that's the big supply, which is about 6 million square feet, which is coming in H2. And as we speak, this month, out of 6 projects, we'll be launching 3 projects this month. So that's where we are now. Very strong pipeline today. And also we have got the projects which are under construction. We call it as a sustained sales. There also a good amount of supply is there. So we are pretty comfortable in reaching our annual guideline.
What is the inventory that you are sitting on right now in terms of completed flats but not yet sold?
Zero.
All right.
We always maintain the zero inventory on completed projects. We do not, as an organization, have completed projects. As the projects launch, we have the track record of sales at launch, close to about 35%. So during this construction period, we sell about 90% in the 50% when the project is sold. So we have got a very good, and mid-market is the flavor of the day today, and there is a very strong demand. Hence, we are never bothered about inventory sales at all. So we just focus on new launches and how we can enhance further sales on it.
Okay, so zero sales is what you said. So that also is shareholders liking it. That's also the signage for that. But I wanted to understand your balance sheet as well. You had reduced debt in quarter one. Net debt in quarter one reduced to 341 crore, 364. Actually, it was around 364 crore rupees. What was the debt reduction in quarter two? And for the second half, what is the debt reduction plan?
We are standing at 340 crores now on the net debt as of September 30th. As I again given the guideline, we are likely to generate some good cash flows in the next 12 to 18 months' time. So net debt should come closer to zero in the next 12 to 18 months' time. I maintain the same guideline.
Okay.
Given that you have nearly 3 million square feet of launches in the second half of the year, your overall guidance is 4.5, and you've done about 1.67 in the first half. What could be the total value of sales in the second half? In H1, it was about 750 crore. What could that comparable number look like in H2? So, could it be double?
Yeah, closer to double. It will be this 2.7 million square foot should give us comfortably about 1,200 crores.
Okay,
1,200 crores.
So you should be around 2,000, approximately 2,000 crore rupees.
About 2,000 plus.
Okay, 2,000 crore rupees of sales in this year. And in a sense, you are mostly in the south. You are expanding, of course, to other metros as well. After those launches, which will be the biggest focus market for you? If you can split it geography-wise for us, what is the pipeline now?
Bangalore is number 1, followed by Chennai and Calcutta today. So Calcutta we have been clocking phenomenal volume. H1 we had done about 500,000 square feet. It's a good number. Again, H2 we are looking at least about 500,000 square feet. People tell us that we could be the largest in Calcutta with a million square feet sales year after year. So, which is a good positive surprise to us. In fact, Calcutta, we are chased by other developers to take up projects in Calcutta. So, we are also looking at, is there a possibility to expand? Given our brand strength today and also bandwidth what we have today, the opportunities are really good, particularly on development management. As you knew that, we are the leaders in asset-light model. In the development management, we have a portfolio of 34%, and we are the leaders in South. So this kind of opportunities knocking at our door today. So I am bullish about the growth prospects for the company in the next, not only H2, for the next 3 years' time.
Just one final question. So you all make long-term plans as well, right? We've spoken enough about the current quarter and the next 2 quarters. Give us a sense of what is the kind of development that you've planned for the next 3 years or 5 years? Do you have any kind of target in mind where you see the company?
I see just stay focused. See, most
I meant quantitatively, not qualitatively. Do you have a 3-year launch pipeline that we want to build, say 15 million square feet, 20 million square feet in the next 3 years?
Yeah, see, most difficult thing, when long back somebody asked Mr. Narayanamurthy Infosys, what is the most difficult thing? Sticking to your basics, that's the most difficult thing. But people think that that's the easiest, but the most difficult to practice. So we would like to stick to our basics. This has been the practice for the last 20 years. We'll continue to stay focused on mid-market and affordable housing. We'll continue to stay focused only on this. We are looking at growth from 4.5 million square foot this year to 5.5 million square foot for FY24 to 7 million square foot FY25. So again, the same Bangalore, Chennai, Calcutta, Hyderabad, Pune. This is the market we are looking at growing. And we got a good pipeline for projects today. We got good list of projects. As you know that we have a portfolio of about 3 million square feet. For us to reach this next 2 years of growth, we don't need to get new parcels of lands. Having said that, we have been in discussions in concluding a lot of new projects. So we'll be comfortably moving on this 5.5 million to 7 million square foot in the next 2 years' time.
Right, okay, the street seems to like your commentary. Sir, thanks a lot for joining us and taking us through all those details. So targeting 2,000 crores of sales in this year with volumes of around 4.6 million square feet. That's Shriram Properties up 1.5%. We'll do one thing, we'll slip into a short break now. We'll put focus on CRM Silk Mills and Rainbow Children's Medicare. They are buzzing in trade after reporting their Q2 numbers. Stay tuned.
Welcome back. Commodity names are moving up. Hindalco is now the top gainer, up close to about 4%. JSW Steel 2.7% higher. Tata Steel too, rallying more than 2%. But let's get to our Midcap Spotlight segment. Vahishta is here and she's going to tell us about CRM Silk. Vahishta?
Hi Reema, thanks for that. Well, CRM Silk Mills had reported their numbers and it's been an all-round beat on the performance, which is led by a better product mix. The revenues were up 33% on year-on-year basis, while the margins have also jumped to 18.9% in this quarter. Now, this was led by the domestic market demand, which remains buoyant at present, and there's an increasing traction even from the exports market. The volumes have grown double digits, while there's been a robust growth in realizations, which was led by premiumization. Now, for the fabric business, in the first half of the ongoing financial year, the revenues were up 30% to 736 crores, while the share of fabrics in the total revenue has slipped to 70%, versus 77% on a year-on-year basis. There's also been strong demand revival in Tier 2 and 3 cities. While for the apparels business in the first half of the ongoing financial year, the revenues were up 92% on a year-on-year basis, which comes to 216 crores. The share of apparels in the total revenue has grown to 21% versus 15% on a year-on-year basis. So there will be new brands and designs which have helped to demonstrate the good performance in this segment. Both the trade and retail have witnessed encouraging trends, which is led by higher secondary sales and strong retail footfalls in the multi-brand outlets. The board has also approved a 200% dividend of 4 rupees per share, and the record date for dividend will be November 14th.
Thank you very much for that. Let's also talk about Rainbow Children's Medicare. That's posted a strong Q2. Ekta is here with the details.
Thanks for that. Well, yes, definitely a strong performance which is coming for Rainbow. Revenue up around 18% year-on-year, EBITDA up around over 20%. Margins have improved to 35 versus 33.5%, and a profit which is up 35% year-on-year. Similarly, Q-on-Q as well, the performance stood out. So revenue up 32%, margins stable as well, and a profit growth of around 60%. A couple of important statistics. Occupancy has improved to over 62% for the quarter gone by. This is better than 46.6% same time last year and 43% in Q1. Average revenue per occupied bed has also improved all the way to actually dipped to around 46,959 rupees. Now, the company did say that they would focus on the quality of business than occupancy rates. The expectation is that occupancy this quarter was impacted because of an aberration due to too many virals taking place amongst children, and hence we saw occupancies rise. Average revenue per occupied bed, in fact, reduced because of the case mix. So they expect these kind of parameters to normalize going forward. They have also started a new facility in Chennai, and they have said that they have managed to see a good amount of occupancy within the Chennai facility. They do have operations in other sectors as well, such as Delhi, and they have also operationally broken even on that one. The stock itself has done quite well. It's up over 40% from its issue price of over 500 odd rupees. So the street likes the numbers, especially the margins and the occupancy this quarter.
Thank you very much for that. Earlier today, we had a chat with Ramesh Kancharla, the chairman and MD of the company. He spoke about the company's operating metrics, occupancy rates. Listen in.
We have come back into the business. All the operating metrics are pretty good. And as we see in future, we're confident that what we are able to deliver in the next 2 quarters, the overall year goes up, would go well. Even in the occupancy is about 55% also. What's important is what the quality of the business we do. So in the current quarter that we had a lot of seasonality business, which is why even our average occupancy, average revenue per occupied bed is perhaps lower compared to the normal quarters. So question here is that with the quality business versus occupancies. I would always go for the quality of business and not too much focus on the occupancies. Chennai is the geography where we are pretty bullish about it because the Rainbow established excellent reputation in Chennai city, and our hub hospital, though it's a 3-year-old, is doing extremely well. And in the first month itself, we tracked very good numbers in Chennai new facilities.
With that, out of time on Midcap Radar. Thank you for watching. Your stocks when we return.